Welcome back to everyone. Today's update may honestly be one of the biggest institutional crypto developments we have seen in a very long time, because some of the most powerful financial companies on Earth just completed a blockchain transaction that could completely reshape how money moves globally. We are talking about JPMorgan, Mastercard, Ripple, and Ondo Finance, all working together in a real-world pilot that connected the XRP Ledger directly with banking settlement infrastructure. This was not just another crypto experiment or a small test hidden inside a lab somewhere. This was a serious demonstration involving tokenized U.S. Treasuries, real bank accounts, real settlement rails, and real-time movement of value across borders. What makes this even more important is the fact that it happened outside normal banking windows, proving that blockchain infrastructure may finally be ready to solve problems traditional finance has struggled with for decades. For years, people in crypto have talked about tokenization, instant settlement, and 24-hour financial markets. But now, some of the biggest institutions in the world are actually putting those ideas into motion. And if you are holding XRP or watching the future of digital finance closely, this is exactly the type of development you want to pay attention to, because it shows the gap between traditional finance and blockchain technology is starting to disappear faster than most people expected. Now let's break down exactly how this historic transaction actually worked, because the details here matter a lot. The process moved through multiple major financial systems in one connected flow. First, Ondo Finance handled the redemption of OUSG, which is its tokenized U.S. Treasury product running on the XRP Ledger. That alone is already significant because it shows tokenized government-backed financial assets operating directly on blockchain infrastructure. After that, Mastercard's multi-token network stepped in and routed settlement instructions over to Connexus, which is JPMorgan's blockchain-based payment system. Then finally, JPMorgan delivered US dollars directly into Ripple's Singapore bank account. Think about that for a second. A tokenized asset began on a public blockchain, moved through global institutional payment infrastructure, and ended as actual fiat money sitting inside a real bank account almost instantly. This was not theoretical. It was not a concept paper. It was an end-to-end demonstration showing public blockchains and traditional banking systems can operate together in a seamless environment. And that is what makes this pilot so powerful, because for years, critics argued that banks and blockchain networks would never truly integrate together. But now we are watching major institutions prove the exact opposite. One of the biggest reasons this matters is because cross-border settlement today is still painfully inefficient in many parts of the world. International transfers can take days, fees are often extremely high, and transactions usually depend on banking hours, intermediaries, and regional limitations. If money needs to move during weekends, holidays, or after traditional banking hours, delays happen constantly. This pilot challenged that entire system by showing near real-time settlement is possible through blockchain-connected infrastructure. And importantly, the blockchain did not replace banks here. Instead, both systems work together in a single integrated process. That is a major shift in how institutions are thinking about digital assets right now. The conversation is no longer about whether crypto replaces traditional finance. Instead, it is becoming about how blockchain technology enhances and modernizes existing financial infrastructure. Ripple has spent years pushing the idea that digital assets can improve cross-border payments without destroying the banking system itself. And this pilot feels like one of the clearest real-world demonstrations of that vision actually happening in front of us. Another massive takeaway from this development is the growing importance of tokenized assets in global finance. For years, people have said tokenization would become one of the biggest trends in financial markets, but many investors still viewed it as something far away in the future. This pilot changes that perception dramatically because now tokenized U.S. Treasuries are not just existing on-chain as digital representations. They are actively participating in cross-border settlement flows involving some of the world's largest financial players. That changes the conversation entirely. It means tokenized assets are moving beyond simple experimentation and starting to enter live financial infrastructure environments. And when institutions begin proving that tokenized bonds, treasuries, and financial products can move globally with near-instant settlement, the implications become enormous. Suddenly, markets no longer need to close the same way they do today. Financial systems no longer need to pause because one country is asleep while another is awake. Blockchain infrastructure creates the possibility of continuous global liquidity, and that could eventually transform how capital markets operate worldwide. What also stands out here is the role of the XRP Ledger in all of this. The XRP Ledger has often been discussed mainly within crypto circles, but now it is increasingly becoming connected to institutional-level conversations around tokenization and settlement infrastructure. That matters because institutional validation is one of the strongest long-term drivers for blockchain adoption. Retail excitement can move markets temporarily, but when trillion-dollar financial firms start building and testing on-chain infrastructure, the industry enters a completely different phase. The fact that Ripple's ecosystem was part of a transaction involving JPMorgan and Mastercard is incredibly important symbolically. These are not small fintech startups. These are financial giants with enormous global influence. Their participation sends a message that blockchain technology is no longer viewed as a fringe experiment. Instead, it is being taken seriously as a component of next-generation financial infrastructure. At the same time, another massive institutional development is happening in the Middle East, and this one also connects directly to the future of crypto adoption. UTM_source equals chatgpt.com, the world's largest custodian bank with nearly $59 trillion in assets under custody and administration, is expanding its digital asset business into Abu Dhabi. This move is happening through partnerships with FinStreet and ADI Foundation, and the initiative will operate inside Abu Dhabi Global Market, also known as ADGM. If you have been watching global crypto regulation closely, you already know ADGM has become one of the fastest-growing blockchain and digital asset hubs anywhere in the world. Initially, BNY will focus on custody services for Bitcoin and Ethereum, but plans already include expansion into stablecoins and tokenized assets. That part is extremely important because once again we are seeing one of the largest institutions in traditional finance moving directly toward tokenization infrastructure. For people who may not fully understand why this matters, remember that custody is one of the most important pieces of institutional crypto adoption. Large financial institutions need regulated, secure systems for storing digital assets before they can comfortably participate in the broader crypto economy. BNY entering Abu Dhabi signals that demand for regulated digital asset infrastructure is growing rapidly at the institutional level. And what makes this especially interesting is the location itself. The UAE has become one of the most aggressive regions globally when it comes to attracting blockchain innovation, crypto companies, and institutional digital finance businesses. While many countries are still debating regulations and struggling to define legal frameworks, Abu Dhabi spent years building structured crypto policies through its Financial Services Regulatory Authority. That clarity gives global institutions confidence because major banks simply do not operate comfortably in environments filled with regulatory uncertainty. BNY executives are also making it very clear that this move is about much more than simply holding Bitcoin or Ethereum. The bigger opportunity is tokenization. That means placing real-world assets like bonds, real estate, private equity, and financial securities directly onto blockchain networks. If that future develops the way many institutions expect, then blockchain technology could eventually power trading, settlement, custody, and ownership transfer all inside one integrated environment. And when you connect this back to the earlier Ripple, JPMorgan, and Mastercard pilot, a larger picture begins forming. Institutions across the financial world are quietly building the infrastructure for tokenized markets. These developments are not isolated stories anymore. They are part of a broader transformation happening across global finance right now. What is especially fascinating is how quickly the Middle East is becoming a major center for institutional crypto activity. A few years ago, most conversations around blockchain innovation focused mainly on the United States or parts of Asia. But now the UAE is positioning itself as one of the world's leading destinations for regulated digital finance. The arrival of a financial giant like BNY only strengthens that reputation. Once one major institution establishes itself successfully, others often follow. That is why many analysts are describing this as a potential domino effect. Global banks do not want to be left behind in the next evolution of financial infrastructure. And if tokenization truly becomes a trillion-dollar industry over the next decade, regions with clear regulations and supportive frameworks could become the biggest winners. Meanwhile, outside of XRP and institutional finance, another crypto project attracting major attention right now is Near Protocol. The project has been gaining strong momentum recently as traders increasingly position around its growing AI-focused narrative. What makes NEAR interesting is that it is trying to evolve beyond a traditional Layer 1 blockchain into a broader infrastructure platform connected to artificial intelligence, scalability, and future-proof security systems. Recently, the protocol announced plans to integrate post-quantum cryptography into its ecosystem. That may sound technical, but it is actually a very important long-term development. Quantum computing represents a future threat to many existing security systems, including parts of blockchain technology. By preparing for that possibility early, NEAR is positioning itself as a project focused on long-term institutional-grade infrastructure. This AI narrative around crypto is becoming incredibly important right now because investors are looking for projects connected to some of the biggest technological trends in the world. Artificial intelligence has become one of the strongest investment themes across both traditional markets and digital assets. Projects that combine AI integration with scalable blockchain infrastructure are attracting increasing attention from traders and institutions alike. NEAR appears to be benefiting from that shift as more investors view it as an ecosystem potentially capable of supporting AI-driven decentralized applications and future digital infrastructure. And when you combine AI narratives with strong security positioning and scalable architecture, it creates a compelling story that the market is clearly reacting to. The trading data around NEAR also suggests this recent momentum is being driven by genuine market participation rather than temporary speculation alone. According to CoinGlass data, futures trading volume surged more than 250% during the rally, climbing above $834 million. At the same time, open interest rose significantly as well. That combination matters because when price rises together with open interest, it often signals fresh capital entering the market instead of just short sellers covering positions. Traders appear to be opening new bullish positions because they believe momentum may continue. And in crypto markets, narrative strength combined with rising derivatives activity can sometimes create powerful trends very quickly. What ties all these stories together today is one central theme. Institutional finance and blockchain infrastructure are no longer moving separately. They are beginning to merge. Whether it is JPMorgan and Mastercard working with Ripple and Ondo on tokenized settlement, BNY expanding digital asset custody into Abu Dhabi, or AI-focused blockchain projects like NEAR attracting major speculative attention, the broader crypto industry is entering a new stage of maturity. The market is slowly moving away from pure hype cycles and toward real infrastructure development. That does not mean volatility disappears, because crypto will always move aggressively. But it does mean the foundations supporting the industry are becoming stronger and more sophisticated. And honestly, this may be one of the most exciting periods we have seen for long-term blockchain adoption, because institutional participation changes everything. When major banks, payment companies, and asset managers begin building around blockchain technology, the entire conversation shifts from speculation to integration. Suddenly, crypto is not just about trading coins anymore. It becomes about rebuilding financial systems, modernizing settlement rails, digitizing assets, and enabling markets that operate globally around the clock. That vision has existed for years inside the crypto space, but now the largest financial institutions on Earth are beginning to validate it with real-world pilots and real-world infrastructure deployment. For XRP holders specifically, developments like this are especially important because Ripple's long-term value proposition has always focused on cross-border settlement and financial infrastructure efficiency. Seeing the XRP Ledger involved in institutional tokenization and settlement experiments strengthens that narrative significantly. It suggests Ripple's ecosystem is remaining relevant during the industry's transition toward tokenized finance. And while nobody can predict short-term market prices perfectly, institutional integration stories like these often shape long-term market perception in powerful ways. So as we move deeper into 2026, pay very close attention to these institutional blockchain partnerships because they are revealing where the future of finance may actually be heading. We are watching the early foundations of a financial system where tokenized assets move globally in real time, where banks interact directly with blockchain infrastructure, where markets potentially operate 24 hours a day, and where digital assets become deeply embedded into mainstream financial operations. And if these pilots continue succeeding, the next few years could look very different from anything the financial world has experienced before. Thank you for watching XRP Insider. If you enjoyed today's update, make sure to subscribe, turn on notifications, and stay connected because the institutional crypto race is accelerating fast, and we will continue bringing you the biggest XRP, Ripple, blockchain, and digital finance developments as they happen.